Thanks for clicking. We had another week of good news in China's economic recovery this week, as the economy continued to show signs of rebound following 2 months of zero COVID lockdowns, with President Xi Jinping reiterating that China would indeed hit its 5.5% GDP growth target. We also saw further assurances from the People's Bank of China, the PBOC, that the central bank would indeed provide the stimulus to get the economy back up and running again. We also heard from the chairman of China Vanke, one of China's largest real estate developers, who said the real estate market had reached bottom and the slump is over.
Are you kidding me? Are you kidding?
However, the data is showing something much different. With consumers still not coming back to the market, orders for materials are down, and real estate downgrades continue across the board. We also received news that Evergrande is getting sued again. However, we're not going to spend too much time on Evergrande this week, as Evergrande getting sued isn't really news too much at this point, as the developer continues to teeter on the edge.
Thank you.
So what I want to do today is go over China's economic data, looking at its plans to revive the economy after months of stagnation, and then take a look at the real estate market, which continues to struggle to say the least. We're still in the early stages of China's economic recovery, a recovery which will be key to preventing the real estate sector from a full-scale meltdown. We'll obviously have updates on the pace of that recovery every Friday on this channel. If you want to get those updates, make sure you click, like, and subscribe. But for now, let's get into this economic data. While China is still in the early stages of its economic recovery following the end of the zero COVID lockdowns, there have been some positive indicators showing that China is beginning to recover, with business confidence at its highest level in 2 months and car sales up past 2021 levels for the same month.
That things are a bit better. The improvement is in manufacturing, unsurprisingly given the lockdowns are easing. New car sales in the first couple of weeks of June better than 1 year ago. Construction is improving as well. Again, that all speaks to reason because people are allowed to go back to the work, etc.
With the economy starting to improve, President Xi Jinping gave a speech promising that China would use its macro policy tools to hit its 5.5% GDP growth target by the end of the year.
We'll take care of you, because that's part of it.
However, even with business confidence up and the fundamentals getting better, this is going to be a tall order. As we've talked about before, multiple analysts have downgraded China's GDP forecast due to the low 4%. The S&P just this week downgraded China's GDP forecast to the low 3% range. So I think that 5.5% is probably a little ambitious, but if they are going to miss the mark, they might as well miss high. But at the same time that Western central banks, the Federal Reserve, the Bank of Canada, are pulling back, the Chinese central bank is ready to continue to support the economy with more measures. The PBOC will probably resort to measures other than interest rate cuts, like cutting the RRR ratios again, as the country is ultra wary of the debt problems that it already has encountered, and also even more wary of running into inflation problems like we're seeing here in the West. So while China is continuing to show some signs of economic revival, it does have a ways to go, especially if it's going to revive its continually struggling real estate sector.
I don't know nothing about that.
As mentioned, the chairman of China Vanke, China's second largest real estate developer, said this week that the real estate market had bottomed and that the slump was over. Yet the news and the data received this week shows that the Chinese real estate sector is definitely not out of the woods yet. While sales in Shanghai have recovered since the end of the lockdowns, sales continue to decline in the first 3 weeks of June in China's top 4 cities. Further, despite China's stimulus for the real estate market and the opening up of the economy, orders for lumber and other construction materials have continued to be cut back, indicating a sector that knows it's not out of the woods just yet. China's largest builder, Country Garden, recently had its bonds downgraded to junk status as of this week by Moody's. So, despite the economy getting off to a good start, in the real estate sector, we're still continuing to see declining sales and continual downgrades on these real estate developers, which isn't a good sign going forward. While the PBOC and President Xi Jinping have promised to further stimulate the economy, provide more support as this goes on, it's not clear if it will be enough to revive this real estate sector, which continues to suffer even more defaults and downgrades as time goes on, with more and more expected to come in the future. So it's good news to see China's economy back up and humming again, but whether or not they will be able to revive that real estate sector is a whole nother issue. especially when the real estate sector has undergone so many months of decline, and we're starting to see even more, or continuing to see even more downgrades from the international ratings agencies to even China's largest developers. Whether or not China's economy will strengthen to the point that it can revive that real estate sector remains to be seen, but we'll obviously have updates out on that on this channel every Friday. If you want to get those updates, make sure you click, like, and subscribe, and thanks so much for watching.